Hi, I'm Jason Arp. I'm the City Councilman for the 4th District of the City of Fort Wayne, and we're continuing our discussion about business personal property tax. Here on this board are the revenue numbers in millions for property tax, and these are rounded off, so some of the numbers may not tie exactly. If you want to see the actual numbers, they'll be at the link that's in the description of this video, and you can go and pull up the spreadsheet that has those numbers. Okay, first of all, there's different types of property that's taxed. The one that we've been talking about is personal property, which is business equipment. So that could be anything from forklifts to the shelving in a warehouse, and any kind of business equipment. Real property is going to be real estate. So these numbers reflect the total collections of tax revenue from these types of property types. So Allen County as a whole, as this is the 16 assessment, 17 collection year, collected $350 million worth of taxes on both real and personal property. Now, what we've been talking about doing is implementing a exemption on all new business personal property. So over time, this number would go to zero, as when new property replaces old property, is not going to be taxed. I've gotten some pushback from some of the other taxing entities, because there's lots of different entities that collect this. It's not just the city of Fort Wayne. You got Allen County, you got cities, Fort Wayne, New Haven, and others. You got the schools, you got townships, the library, CityLink, which is the city bus, and the airport, all collect some level of property tax. The county treasurer collects the taxes that the assessor and the auditor agree upon taxing. This number here reflects the phasing out of the business personal property tax. The reason this number is not the same as that number is that the way that taxes are collected is the different units create their levy, and then that levy is applied to all the taxable property within their taxing district. So obviously, Southwest Allen County schools have a different district than Fort Wayne Community Schools, so it's just a property within those boundaries. And the reason this number is different is because, one, that tax, part of it is going to go to properties that are not at the property tax caps. So in the state of Indiana, we have 3 levels of caps on real property. 1% on homesteads, so those are residential property, owner occupied. 2% for residential properties that are rentals or apartments or some sort of investment properties, and then 3% for commercial industrial type properties. So this shows that 18 million roughly is going to be spread across other property types, but 37 million in reduction in overall tax revenue from this source. Now, a lot of the people that are complaining about losing this don't mention what we're already doing. We have TIF of 17 million and abatements of 15 million. So that's 32 million, nearly the entirety of it. So when we do an abatement, that means that we're not collecting a certain amount of taxes, and it's taking money away from schools or police or fire departments or those types of things. Same thing with a TIF. Anytime a TIF is created, so a lot of the projects that you see going on downtown, they'll create a TIF to fund some portion of the project, whether it's public infrastructure or some financing. That money is earmarked to stay within the redevelopment commission and does not go to schools. So anytime you see like a new hotel that's being built and it's in a TIF district, well, none of that money goes to schools, none of that money goes to police or fire or public roads or anything like that. It just goes to, it stays within that TIF district. So if we were to do this and phase out business personal property tax, then simultaneously we would, one, you no longer have to abate personal property because, well, it's kind of automatic. And we would make a policy choice that it doesn't make sense to continue to do real property abatement. And so, and then also more or less eliminating TIF as well. gets you back 32 million. So the net impact of this over the entire period is over a 10-year period. We're talking about a $5 million difference once it's totally phased in, and that could take 10 years or longer to do. The reason it would take 10 years is because this phase in, basically you're saying that with each new piece of business personal property, it's not being taxed, and it's replacing some old property that's going to be taken out of service. So anyway, that's the basics on this. Again, go to the website. It's going to be listed. It's jasonarp.com. We'll have this and other information there. Make sure you subscribe to this channel so you can get additional videos, and we'll talk to you next time.